The Financial Education Guide 2022, Financial Literacy 2022. If you think your school taught you how to deal with money matters in your life, then you are misguided. So, if you are someone who gets confused between debit and credit, or you are someone who after lots of trying cannot get a hold of your finances, then you have landed just right. Welcome back to Demystify Daily. In this video, we will discuss what financial education is, why it is important for you to acquire it, and how you can acquire it. Now, if you are looking for the answers to such questions and more, then keep watching. Let's jump right into it. What is financial literacy? In simple terms, financial literacy is the essential ability and skill to understand the financial side of things. This includes a variety of financial aspects such as budgeting management, banking, and investment management. Though these terms are not so straightforward, like when we talk about budget management, this might include your individual budget, family budget, or if you are responsible for managing the budget of some big organization. All these managements are very different from each other. However, I am not here to teach you how you can manage the finances of some firm that you can learn in school. This video will act as a guide to give you a basic idea of all the financial tools and instruments available for you to benefit from and achieve financial success. Let's get going. Why is financial literacy important? The best and shortest possible answer to this is that financial literacy is of utmost importance if you want to avoid making stupid financial decisions in your personal life and want to live a life where all your life worries do not revolve around money problems. A lot of people ask why this is getting more and more important nowadays. So for those of you who are still not sure why this is inevitable, I'll tell you why by explaining the importance. Let's take an example from the US. Previously, people relied on the retirement plans offered by the government or private sector. However, now all is changing. People must resort to plans like 401k. These plans leave it to you to make the contribution from your current income, which you will receive at retirement. I won't say this is something that doesn't work, but not all people are sure about such things. Add to this the rising healthcare expenses and little to no social security benefits, you are on your own. This is where the importance of financial literacy becomes inevitable. A retirement plan is just one of the examples. Others might include an outstanding debt, student loan, mortgage, car lease, or as basic as a saving plan. There are plenty of options for everyone to choose from. However, you can never benefit from all the options available without getting financially educated first. Enough of importance, and let's start at the most basic level. Personal finances. Personal finances are the basis where you can start applying your financial education first. This involves serious decision-making and involvement from the individual. Now the question arises, what are personal finances? How to make a budget? Should I spend more or save more? And how financially good I must be after some years? All these questions must be answered by you. What I can do here is that tell you how you can do it. So, financial education at a personal level encompasses banking, understanding debt and credit, savings, and investment. Start with the banking. Banks. Banks come at a very basic level of financial literacy, as banks are the very first financial instrument when it comes to a financial account, how you can use banks to achieve your financial goals. Let's talk about that. Why do you need a bank? Banks are the entities that hold your money for you. Keeping your money in your bank account rather than holding it as cash is safer. Not only your money in the bank is insured, but it is readily available for you to withdraw according to your demand. On the other hand, there are several transactions that cannot take place without a bank account, such as 1. Getting a debit or credit card. 2. Sending payments online via PayPal or Venmo. 3. Buying or renting a home or car. 4. Receiving a paycheck from your employer. 5. Earning interest payments on your money. 6. Writing a check. And 7. Using an ATM. Brick and mortar versus online banks. Long gone are the times when you had to personally go to a bank to open an account. as nowadays there are plenty of options available online to get registered as a bank account holder from the comfort of your home. However, many brick and mortar banks are also offering online banking services via mobile phone apps and websites. My advice is to go for whatever suits you. Just get a bank account. What type of bank account should you choose, and what type of bank account do you need? There are several types of bank and bank accounts you can choose from. Retail banks. These are for-profit banks that most people use. These banks offer loans, credit or debit cards, and several other services. Credit unions. Credit unions work mostly like banks, however, they are not for profit. Run by the union members, credit unions offer loans and other financial services like banks, but with lower fees. Once you choose the bank, next you must choose what type of account do you want. Savings account. Saving accounts are interest-bearing bank accounts. These accounts provide you with income on your available cash in the bank accounts. Although the savings rate is quite low, however, these are sensible options for keeping your cash safe and earning some interest over in the short run. Although the saving rate is quite low, however, these are sensible options for keeping your cash safe and earning some interest over it in the short run. Checking account. Checking account, also known as a current account, is a very liquid account. Your amount is held by the bank, but no interest income is earned over it. You can deposit the amount and withdraw at your own disposal through both checks and ATMs. High yield saving account. These banks offer a higher saving rate over a conventional saving account. However, the only demerit of such accounts is that it requires a large initial deposit and a higher fee, and are not exactly as liquid as a checking account. Emergency fund. This is not a type of bank account, but many individuals using their financial vigilance for the days of hardship keep a separate emergency fund. Emergencies can include job loss, medical bills, and accidental expenses. You can have a separate account for this, as many people, or just keep a certain amount enough to cover your expenses for at least 6 months, and the amount should never be touched. Now, to another financial tool that you might need right now. Introducing credit cards. These look the same as your other cards, however, the essential difference is that these cards carry the money that you don't have yet, meaning the expenses that are carried out through a credit card you are borrowing from a bank. Benefits. Besides providing you an added benefit of borrowing the money on demand, and if you pay your credit card bills on time, this helps you build your credit history that can play an essential role when it comes to getting services like mortgages and car loans. How are credit cards different from debit cards? While looking the same, the only difference between both these cards is that a debit card deducts an amount from your checking account and a credit card lends you money from a bank. Although there are so many things you need to know more about the credit cards, however, let's move forward to budgeting. How to create a budget. To improve your financial situation, you must learn to track where the money is coming from and going. This is the first step to achieving financial stability. It starts with you tracking how much money you earn every month, your monthly income. Once done, then you need to track all your essential expenses, where you spend your money, and monthly expenses. Once you get a hold of this, then come to the savings. Savings are your key to financial stability. Now that you have a clear track of money coming in and going out, you can dump the things that you buy unnecessarily and save the amount you had been wasting. Are you thinking about how can saving lead to financial stability? Without wasting more time, let's get to it. Investing. There is a variety of options for you to choose from when it comes to investing. There are stocks, securities, bonds, mutual funds, and ETFs. However, there is no certain answer for me to give you when it comes to asking where I should invest. It totally depends on the financial goals you want to achieve, the time you want to take to achieve those goals, and the risk you are willing to achieve those goals. However, if you ask what's the safest investment in the world, then it's the US Treasury securities. Investment is a topic that requires a separate video to be explained, so let me know if you want me to make one for you. On this note, I'll finish this guide here. I hope you liked the video. If you did, please like and comment, and do subscribe to the channel. On this note, bye, and I'll see you at the next one.